How do you become a millionaire if you're currently financially struggling or just okay? Hello and welcome to this week's US Stock Market Report. I'm Gillham, Chief Analyst at Wealth Within. This week I'll be discussing trading to win, and then I'm going to dive into the Dow Jones, the S&P 500, and then I'm going to have a look at the most recommended stocks from 2018. Every day we get approached by people wanting to learn to trade so they can supplement or replace their income and build wealth. Yet overwhelmingly, nearly all are approaching wealth creation with the mindset to not lose rather than to win. Let me explain. If you desire to be a millionaire, then you need to make the decisions a millionaire would make, not the decisions of someone who is financially struggling. So here's the dilemma. How do you become a millionaire if you're currently financially struggling or just okay? Quite simply, everything is a matter of perception. Nothing positive comes from a negative mind, and financial success does not come from thinking of scarcity, but rather one of abundance. When I'm teaching beginners to trade to win, I share with them the principle of be, do, have. In order to have the income and success that a good trader has, first you must be the successful trader in your own mind, and this will allow you to do what the successful trader does. Doing what a successful trader does means not only analysing the markets or stocks to a high level, more importantly it means making decisions successful traders make. If you become a successful trader, do what successful traders do, then you'll ultimately have what successful traders have. Let me give you an example. Successful traders are independent in their thought process, and they are not reliant on anything other than their knowledge, skill, and expertise to achieve their goals. Successful traders do not subscribe to stock tipping reports, nor do they watch YouTube videos of someone in their bedroom or study dressed in a t-shirt or hoodie telling the world what they're buying or selling. Successful traders are successful because they treat trading like a profession and not a game to play. They are successful because of choice, not because of chance. And they trade to win rather than not to lose. Those who trade to not lose will avoid paying for anything if they can, or only pay very little. They believe by getting free education or information and tips from someone or multiple websites that they will become a trader. All that tends to do is disempower them and make them become codependent. Worse, it gives them the illusion that they actually have knowledge and they are actually a trader. Being successful at trading is 80% attitude and 20% skill. When people desire to change their situation and become a trader, they look at who they are and what they have now, and then they dream about who and what they could become from being a great trader. In doing this, they also see a scary, vast, unknown void between these 2 points. They then realise this vast, unknown void requires time, effort, and resources to cross from where they are now to being successful at trading, and the success is not guaranteed. This, in the majority of cases, causes these same people to make decisions to not lose rather than to win. Making decisions to not lose means the person attempts to go the very long, hard and costly way to achieve success by attending every free seminar or do free online courses, surf the websites for hours and hours every week, year after year, and maybe read a few books. The result in most cases is failure or very poor results. So how do you trade to win? Well, quite simply, before you make a decision, ask yourself in front of a mirror, what would the decision of a successful trader be in this case? If you can look at yourself in the mirror and give it a confident answer that you know to be true, then you are on your way. For example, would a successful trader be comfortable paying $1,000 to $2,000 for good software that will assist them to do their analysis? Well, yes, they would. Would a successful trader be okay with paying $100 a month for reliable, good data? Well, yes, they would. Would a successful trader be okay with paying for good education to enhance their skill? Absolutely. The reason why they're happy to do all of these things is that they absolutely know their trading will pay for everything they need to be successful. Successful traders don't look at it in the context of what something will cost them if they do it. They leave that for those who are playing to not lose. Successful traders look at it in terms of what they can do and what they will make, and this is trading to win. So let's go into the charts right now. Starting off with a monthly chart of the Dow Jones Index at this point in time. As you can see there, I've anchored what I call a price retracement from the low in August 2015 at 15,370 points up to the high there at 26,616 points. And as I was mentioning the last few weeks, I still think the Dow's got a little bit more to go down. I'll expand this up, the middle section up in a minute. I am still expecting it to hit down to that 22,320 points because it really hasn't had much of a pullback at this point in time. We've seen a couple of months down, but they haven't been really, really strong. If I zoom this up for you so you can see it a little bit more clearer, you can see here how the current month opened just slightly lower than it did. It finished off in March. So it opened at 24,076. Currently it's 23,932 points, just slightly lower. It'd be interesting to see whether this close on this monthly chart finishes. If in the next half of this month or the next 2-3 weeks of this month we see it's hanging around this bottom half, then I'd suggest that it would start heading down to that 22,320 point mark here, and it probably won't take too long to do that. If it is going to go up and start breaking that all-time high at 26,616, it does need to close up high on this bar and preferably higher up compared to last month's bar or the March bar here. But at this point in time, it's not looking super strong, but it's not looking super weak. So that's the point at the moment. I'm not sure of direction, and when you're not sure of direction, you should be staying out of the market. This is the weekly chart. I've just turned it over to a weekly chart so you can get a look at it. Again, there's a little bit of indecisions. The opens and close from last week and this week, the ones from last week, and the week before. The open and close from last week is contained within the opens and close of the week before. What that's doing is suggesting me there's indecision in the Dow Jones Index in those stocks. And when there's indecisions, there's volatility. When there's volatility, there can be risk. I would suggest that that's going to sort itself out in the next 1 or 2 more weeks, a little bit of the volatility it's settling. Now's the time not to be in the market trying to trade and trying to make some money. Right now's the time to be sitting back and watching. I'm going to go into some stocks. I just picked up Google and I just said, what are the top 5 stocks for 2018? I just thought I'd do what a lot of people generally do. You see them get onto Google and go, okay, what's the top stocks, or what stocks should I buy? And can I say straight up front, that's not the way to make money. If you're following somebody else, then you're following them to hell, pretty much, because unless you understand what you're buying and what you're selling, you're not going to be a very good trader. As I said in my report, traders need to be independent. So let's go and have a look. The first one I'm going to bring up is a stock called Applied Minerals. Now, I just surfed, as I said, Google, and I just typed up top 5 stocks recommended for 2018. I won't tell you the website I got it off, but it's a very popular financial website. Here it says Applied Materials, or AM for Mary, A for Apple, T for Tom is the ticker code on that. And you can see on that left-hand side how very bullish this stock was. So it might have been a very good recommendation a couple of years ago. If I open this up here, the monthly chart, we can see this run's been going now since August 2015. So we're getting close to 3 years, and all bullish runs end. So to me, it's no use recommending it near the end, and often the amateurs get in the top. There's an old saying in the marketplace, the professionals open the market, the amateurs close, but the professionals buy at the bottom and sell at the top, and the amateurs buy at the top and sell at the bottom. To me, I don't think I'd be recommending this stock. It is currently, this month is a bearish bar on that. It's not super bearish, but I don't think I'd be recommending anybody to get into this stock right now. If you're in it, I'd be staying with it. Now, the next one I've got here is Alexion Pharmaceuticals with the stock ticker code of A for Apple, L for Lima, X for Xylophone, N for Nelly. Now, this one, as I said, is a little bit more interesting. Its high was in July 2015, so it's been falling away quite consistently, with its most recent major low being here in May 2017. And it's found some support across here, which is quite interesting. For me to be more interested, I'm actually more interested in this stock than I was in the previous stock, simply because What falls away then will go back up again. So once it's found some support and starts to show us some strength, then that's the time to start looking at it. So I would like to see this stock hold where it is at this point in time and not go down any further. But when it starts to move up, just a simple trendline entry on this stock would be a good little entry point. So you've got a trend line across, pretty much across there. And you could, once it starts moving through that, you could enter pretty simply. These rules that I'm showing you here, I've got a couple more rules. They're in my book, Accelerate Your Wealth, which is out in about July in the US. So you might like to get that in terms of, it will share with you how to get in a stock like this quite simply. Now, the next stock we've got here is a company called First Data Corp, or F for Freddy, D for Dog, C for Charlie as the ticket code. As you can see there on the left-hand side of the screen, it really hasn't been on the market for very long. So it started in October 2015 with its high in, looks like October 2017 at $19.23. It is falling away here. The current bar suggests it's weak. The previous bar in March suggests it's weak. It suggests it's got further to fall. Let me just put a tool, one of my pretty cool price retracement tools on that. And you can see how it's fallen down into that 38.2% retracement of that range from the low of $8.37 to the high of $9.23. It could find support here, but I'm suggesting at the moment it probably won't hit down to that $13.80. If it does start hit that level and start to find support and starts to rise, that could be a really, really nice level to get into that stock onto. But right now, as I said, even looking at the weekly chart, you can see how the weekly bar chart looks quite bearish as well. So just stay out of it for a little while, but wait. And often when you get these reports out, you'll see that stocks will continue to fall away afterwards. So at this point in time, let's just wait and see and have some good rules on it. So let's look at the next one, which is called Constellation Brands, and have a look at this. A phenomenal stock. It's been rising now for a lot of years, and I would suggest, again, now's not the time to be getting into this stock. I would be waiting for some form of pullback on it because it just doesn't go up. No stock goes up forever because people think, wow, it's getting way too expensive now. Because you could have bought this stock way back here at $116, August 2015. It's more than doubled its price since then in the last 3 years. And it just keeps going north. But at this point in time, it's not showing me that it's weak. So if you do own it, I'd still suggest to hold that stock. But at this point in time, would I be taking new positions in it? No, I'd be looking for ones like the other two stocks and waiting for them. There's probably more upside on those in terms of percentages. I believe the last one here is one called Owens Corning, or the stock ticker code O for Oscar, C for Charlie. Not a bad looking stock, but again, it's been coming down the last couple of months. If I bring that up, it has only been on the market since where we've got that November 2006, so it is a bit more short. But you can see how now the angle of this move up is quite steeper, so it's suggesting it's coming down a little bit. So let me put my nice little tool on here again, and we'll see roughly where it's going to come up. And there we're looking at around 61.58 as that sort of first port of call. Right now it is looking a little bit more indecisive. I'm not suggesting it's going to fall too much. It may only fall for another month or two, but I'd wait for it to find some support at this point in time before getting into it. Let's go back to the weekly chart just before I finish up. Again, a bit of indecision through the last few weeks. So if it does start to fall this week and breaks below that low of $76.83, I think it's got a little bit further to go, but then I'd put this one on my watch list. So there's a bit of a mix in this bag of 5. There's a little bit of mix, some good companies to watch, and there's a couple companies, if you are in it, stay in it. If you're not, don't get into it. So that's my take on the hot stocks for 2018 from, as I said, a popular website. So hope you've enjoyed this part of the report. Good luck, good trading, and I'll talk to you next week. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.